What if I told you while the rest of the stock market has been bleeding this year, two defense companies have been quietly printing money? Not hype stocks, not meme plays, but real companies with billions in locked-in revenue. While tech stocks were panicking and the S&P 500 struggled through uncertainty, one of these stocks is already up over 26% in 2026 alone. The other is sitting on a massive $268 billion backlog. And most retail investors still haven't touched them. So in this video, I'm going to reveal both stocks and break down exactly why they're winning. I'll also show you the key numbers so you can decide if they deserve a place in your portfolio. Before we jump into the stocks, you need to understand what's happening globally. Right now, we are in a full-blown rearmament cycle. Military spending is rising fast across the world. NATO countries are increasing their defense budgets, and global tensions are pushing demand higher. The Middle East conflict is driving urgent demand for missiles and air defense systems. All of this is accelerating at a rapid pace. And the United States is leading this surge. A massive budget shift is already being planned. The proposed U.S. defense budget could reach $1.5 trillion by 2027. That's up from $901 billion, which is a 76% increase. When governments spend like this, only a small group of companies benefits the most. These companies capture the majority of defense contracts. And today, we're focusing on the two biggest players. Let's start with stock number 1. This is a company that defines modern warfare. It builds some of the most advanced fighter jets in the world. It also develops missile systems and hypersonic weapons. And it's even involved in deep space technology. This is not just a defense company, it's a full technology empire. In April 2026, its spacecraft completed a deep space mission. This was the first crewed mission in over 50 years. It validated future lunar exploration capabilities. And it shows how advanced this company really is. The company operates across multiple major segments. These include aeronautics, missile systems, and space operations. It plays a key role in global defense infrastructure. Now let's talk about the numbers, because this is where things get interesting. The company holds a $194 billion backlog. That's more than 2 years of guaranteed revenue. Its annual revenue reached $75 billion. Growth is steady and supported by government contracts. This creates strong financial stability. Its missile division is growing rapidly. It is seeing double-digit revenue growth. New multi-billion-dollar contracts continue to come in. Demand is not slowing down anytime soon. And that momentum is driving performance. The stock itself is up over 26% this year. That makes it one of the strongest performers in the market. However, it's not completely risk-free. Margins are under pressure in some segments. And cash flow has slightly declined. Even with these risks, demand remains extremely strong. Defense spending is increasing at a massive scale. This creates long-term growth opportunities. So now it's time for the reveal. Stock number 1 is Lockheed Martin, ticker LMT. If you're not watching this stock, you might be missing something important. But now let's move to stock number 2. This one is even more interesting in some ways. Analysts actually rate this stock higher. And its backlog is even larger. This company was created through a major merger. It combines aerospace and defense capabilities. It operates through 3 major business segments. These include missile systems, aircraft engines, and avionics. This gives it a powerful advantage. The company uses a dual-engine business model. When defense spending rises, one segment performs. When commercial aviation grows, the other segments benefit. This allows it to win in different economic conditions. It creates a strong and balanced business model. Now let's look at the numbers for this company. It has a massive $268 billion backlog. That backlog is growing year over year. Its revenue reached $88.6 billion. And growth continues to accelerate. Earnings jumped by 41% in a single year. That kind of growth attracts big institutional investors. The company also generates strong free cash flow. Billions of dollars are available for reinvestment. This supports long-term expansion. Analysts have given this stock a strong buy rating. Price targets suggest meaningful upside potential. The company is also winning major defense contracts. Production is increasing across key systems. And momentum continues to build. There are some risks to watch. There is an ongoing dispute related to aircraft engines. This could create short-term uncertainty. However, the overall business remains strong. and the long-term outlook is still very positive. The stock has already surged significantly from recent lows. It plays a key role in global defense systems. It is highly diversified and financially strong. Now it's time for the second reveal. Stock number 2 is RTX Corporation, ticker RTX. So now we have two powerful companies. Lockheed Martin is the more stable defense-focused option. RTX offers more growth and diversification. Both are positioned to benefit from rising global defense spending. Choosing between them depends on your strategy. We are currently in a long-term defense expansion cycle. Global tensions are not slowing down anytime soon. Governments will continue increasing their budgets. These companies are directly tied to that spending, and that creates a strong long-term opportunity. Before you chase hype stocks, think carefully. Are you investing in industries that governments rely on? These companies may not be flashy, but they are powerful. They generate consistent revenue and long-term growth, and they are worth watching closely. If you found this video valuable, make sure to like and subscribe. It really helps the channel grow. Also, drop a comment below. Which stock would you choose, LMT or RTX? I'll see you in the next video.